Hello traders, what if you could flip the odds in your favor, turning 50-50 guesses into 70% with trend winners, or say 1-to-1 counter trend scalps, all from pure bar reading that pros use to print consistent money without indicators. In this 8-minute masterclass, you will discover the two core trade types, with trend and counter trend, and why one builds accounts while the other burns them if mishandled. This is the skills that separate survivors from 90% who quit. Stay locked in. Your next profitable setup starts now. Section 1. With trend versus counter trend trades. Let's break this down from the ground up, as if you're seeing it for the first time. Because even experienced traders sharpen their edge by revisiting these basics. In pure price action, every trade falls into one of two categories, with trend or counter trend. These aren't arbitrary. They're based on the market's current mood and the bar's conviction. With trend trades are the high probability workhorses. You enter in the direction of the established trend, like buying into a deep pullback, always in long during bull trends, or always in short during bear trends. The setup is simple but powerful. Wait for a pullback in the trend, then enter on a signal bar breakout in the trend direction. In strong trends like spikes or tight channels, pullbacks are shallow with minimal overlap, making these entries 60 to 70% probable because the market shows clear conviction, shaped closes, trending bodies, no hesitation. You risk a small buffer below the pullback low for longs, targeting measured moves, or 1-to-2 risk to reward ratio, letting the trend do the heavy lifting. This is where accounts grow steadily, low risk, high reward, and the market's momentum on your side. Counter trend trades are the riskier scalps. You fade the extremes, betting against the immediate move, like buying into a deep pullback in a bear trend or selling into a deep pullback in a bull trend. These happen at the ends of trends or in trading ranges, where price overextends and shows rejection. Long tails, doji bars, or closes in the opposite direction. Probability here is lower, around 30 to 40%, because you are fighting the current momentum. So you take quick 1-to-1 risk to reward ratio targets with tight stops to protect capital. Use them sparingly, only on strong reversal bars at key levels like support or resistance flips, and never in the middle of a strong trend where they become traps. The key difference? With trend builds equity over time. Counter trend is for quick hits or confirming reversals, always with a smaller size to match the lower odds. As you start applying these trade types bar by bar on real charts, the daily insights here on the channel make the difference. Subscribe to get the setups that turn this theory into your daily practice and real results. Section 2. With trend and counter trend walkthrough. Example 1. With trend trade. This 1-minute chart shows a clear bull trend move, higher highs and higher lows, with trending bars and low overlap. After a strong bull leg, we get a shallow pullback, minimal overlap, just two small bars, still always in long. A bull signal bar forms, closes near its high with shaped lower tail showing rejection. Analysis Shallow pullback in bull trend means high prob V trend setup. The signal bar confirms buyers reloaded. Entry, buy stop above the high. Stop, below pullback low with a small buffer. Target, measured move of prior leg or 1-to-2 risk to reward ratio. This is classic V-trend trading momentum on our side. 65 to 70% probability. Example 2. Counter trend trade. Assume we have a normal market cycle. We start with a bear spike. Then we see a reversal bar and we enter a counter trend buy position against it. But we get stopped out quickly because we went counter trend. After that failed counter trend trade and the pullback, the cycle continues. The bear trend with the first pullback after the spike moves into a tight bear channel. In the tight channel, we see another pullback. And again, we enter a trade. This time counter trend again. And we get stopped out once more. Then the tight bear channel breaks. And we move into a broad bear channel. We see a stronger pullback. And we enter another trade. Again counter trend. But we get stopped out once more because we went counter trend again. Even thought it's a broad channel and counter trend might have worked. We weren't paying attention that we were near the top of the broad bear channel. So we wait. When price reaches near the bottom of the broad bear channel and we get a strong bull signal bar for a deep pullback, we enter a counter trend buy position against the direction. This time the 1-to-1 counter trend trade succeeds. And right after, price reverses back down from the top of the broad bear channel. As you just saw, counter trend trades lose more often than they win. The smart move is to always trade with the trend. To sum up, with trend trades ride the momentum for 60 to 70% winners on pullback breakouts, while counter trend scalps fade extremes for 1-to-1 hits at 30 to 40% odds. Use them wisely to stack probabilities in your favor. This channel is your daily price action lab. Full courses, quick tips, live trades on Dow Jones, Gold and other major indices, all pure bar reading. 15 minutes here a day builds the skills to read charts simply and profit consistently. No indicators needed. Hit subscribe and ring the bell right now. Don't miss tomorrow's session on V-trend pullbacks in spikes. Trade smart. See you soon.